you know, to a lot of people, they're looking at those kind of discounts and they're saying nobody's going to sell their house for that. Nobody's going to go that low, but yet you and I know that it happens every day. What are some of the factors that put people into a situation that would allow them to do that?
That's a great question, and I get that question from bankers. I get that I get that question from people in the mortgage industry that's not necessarily in the investment side. I get it in the presentations I give. But bankers are a great example. The first time I meet them is they'll look and say, you can't buy a house for that.
Right.
It's a myth. Well, it's really not. Out of the 108 houses that we bought last year, almost every one of them fall in the following three categories. And those three categories are, number one, the house is so poorly maintained and lack of maintenance that they can't sell the house to the normal homeowner that wants to come buy it and live there. It looks bad, smells worse.
Right.
Okay? It's in poor condition. The typical buyer or potential buyer with a real estate agent would walk in and walk right back out. So the house is poorly maintained. That's number one. Number two will surprise a lot of people, inherited. We buy a lot of inherited houses. A lot of times the children, the heirs to the property, don't even live in Houston.
Right.
They're out of town. They come in. They see our advertising. You know, mom and dad are now gone. The house may not have been updated a lot the last 10 to 15 years. So it's normally not atrocious, but it's outdated, and the children just don't want to fool with it. They want the easy exit. Number three is the pre-foreclosure market, not the foreclosure market, but the pre-foreclosure. People, for whatever reason, have gotten into a financial bind, and normally we're able to come in, buy the house from them, and get them out of that situation, usually get a little money in their pocket and save their credit from a foreclosure on their record. That's the main three. There's others, but that's the main three. Now, one thing I do want to point out in the example I gave earlier, where if you purchased a house for, let's say for $50,000, that's worth $100,000. You can't believe these flip this house shows you see on TV. they would label that as a $50,000 profit. That's not the case. We've got repairs. We've got a lot of soft cost, the purchasing cost, the carrying cost, the interest payments, the insurance, the taxes, and the selling cost.
Right.
These types of examples I'm giving you will normally yield a 15 to 20% net profit at the end, not the 50% profit that you see. That's not real.
And I think that's